Hey traders, Akil here. Welcome to another episode of the Trading Edge video, a special weekend edition. So this one will be up on YouTube. If you guys are new, I am a Forex trader. I'm also a trading coach over at tier1trading.com. And this is a daily video that we put out to our Tier 1 members, showing the ideas that are on our radar and also reviewing trades that we take throughout the week. Now, today we're going to revisit the euro dollar. We're also going to take a look at the Aussie dollar. But we're going to revisit the euro dollar, and the euro dollar is a pair that has been on our radar for the longest time. Now, I'm not sure which videos were on YouTube. I know we've talked about it a lot during the daily series. I think I discussed it a few times on YouTube, so you can go back and watch some of the previous videos to get that overview on what's happening, just my general opinion. But I'll try to do a good job of recapping everything in this video as well. By the way, if you guys are new, make sure you subscribe. That way you don't miss an episode of the Trading Edge. That way you don't miss an episode of the Trading Coach podcast. And make sure you're involved as much as you can be if you want to take your trading to the next level. So here on the euro dollar, we've been in a very interesting situation because we've been what seems to be really back and forth in the markets. We've essentially put in a handful of consolidation patterns, and let's just start on the daily and we'll do a little recap of what's been happening here. So biggest picture for me, because the daily chart is the highest time frame that I go to. Biggest picture on the daily chart, we've recently put in a head and shoulders top, which is a reversal pattern, right? Typically after this type of pattern formation, you see a reversal in trend. So in this case, the end of a bullish trend and the start of a bearish trend. Now, we don't technically have the start of a bearish trend yet per our rules, but that would be the expectation. And we looked at this maybe a month or so ago, and we had two different projections for targets. We had a short-term projection and we had a long-term projection. The short-term projection was that we'd see a breakout off of this right shoulder down to the $1.13 level, and indeed we did get that. The bigger projection is that we would see a move down to the 110, 108 level, and that projection still holds true. Now, we haven't made any progress towards that level, but overall on the daily, again, which is my higher time frame, nothing has changed in my views, and I'll tell you that, and I'll tell you why. It's really just the integrity of the move. And if we take a look, let's just delete some of the funky stuff I have here, right? For you guys that have gone through the emergence course, and if you're not sure what the emergence course is, it's one of the free trainings that we offer with our trial membership. Perfect time to shamelessly plug. If you're interested in a trial membership on our site, just go to tier1trading.com, hit that button that says start your 14-day trial. It costs $1. That way we keep kind of the trolls away, right? They don't want to spend any money. And you get 14 days on the site. So you get access to a training course. You get access to 2 live rooms, accountability sessions, our trading software, a lot of other stuff, community chat. It's $1. After your 14 days, it's automatically canceled. So you don't have to worry about any type of rebill or anything like that. But one of the things that we teach in the emergence course is rules for identifying a trend, because that is a major problem with a lot of traders. In general, a major problem with a lot of traders is that they don't know how to read a price chart. And no matter what type of trader you want to be, whether it's you want to make an automatic system, whether you want to be a trend continuation trader, a counter trend trader, a pattern trader, a moving average trader, what have you, you need to know how to read a price chart. And it's something that confuses a lot of traders. And don't feel bad. That's normal. It took me a while to really understand a trend. We're working with a few traders on the platform right now. In fact, one of our traders, Naomi, who's working extremely hard to take herself to the next level, she's been recently asking a lot of questions about trends that exist inside of trends. So we're going to, in Monday's Q&A session, we're going to kind of do a lesson on that and teach you how to ignore the smaller trends that exist inside the bigger trends. But it is difficult, and something that makes it easier to deal with is having strict rules. And one of the rules that we use to identify trends and really the violation or continuation is the significance of structure. And you can see that once we had our breakout down here, right, we call this our lower low, lower close. This move, right, this bearish rotation for me is not violated until we violate our previous outside return, which happens to be right there. And that's what I mean by, although the market is kind of back in consolidation, you'll see that when we go down to the lower time frames, the integrity of the overall move on what I used as the higher time frame, which is the daily, nothing has been violated there. So there's no reason to change my overall bias in the market. Now, as we go down to the lower time frames, that's a fancy way of saying I'm still looking short, As we go down to the lower time frames, a 4-hour chart, you're going to see kind of the funkiness that happened. Again, remember we had the head and shoulders top on the higher time frame, and then we did this, right? We came down, we put in a smaller head and shoulders bottom here on the lower time frame, right? This was a massive move that I actually caught and got a few hundred pips out of it, which was awesome. And then even that within, or I guess after that head and shoulders bottom here, we formed an even bigger head and shoulders bottom here. And currently we've extended off of that and we're retracing right back into that line. And well, lo and behold, as we retrace back into that line, guess what we have? Another potential head and shoulders top. So the market hasn't given any clear direction on which way it wants to go. It's been doing this, reversing, doing that, reversing. A good example of consolidation. And this can be confusing to many. I know some of you are confused right now. Well, it's consolidating, so how do I know bullish or bearish? And again, this is important. This shows the importance of using multiple time frames in your analysis, right? We teach a process, I'm going to talk about it a little bit later in the video, called IPDE. Identify, predict, decide, execute. And what that does is it gives us a routine in evaluating the markets. It gives us a process in which to follow. And it really gives us guidelines on what time frames we use to dictate what. And IPDE, identify, predict, decide, execute, starts off on the higher time frame. So on the daily chart, that's when I do my I and my P. I identify and I predict. So I identify what the underlying move is, what the underlying trend is, and I make a prediction based off of what I identify. Now, knowing that on the higher time frame, although we're doing this consolidation, we're bouncing up and down, we're reversing, we're doing this, we're doing that on lower time frames, once again, my overall viewpoint hasn't changed until I see some type of violation on the higher time frame. So you may want to make a habit of practicing multiple time frame analysis. It's going to make your life a lot easier if you're able to follow a process and know exactly what you're looking for on each time frame instead of kind of confusing yourself. But what we're looking for here, I'm looking for a continued short opportunity. However, I'm not looking for a continued short opportunity at the moment. I need a violation to happen. And initially during the week, here was the move that I was looking for, right? Price action came down. If you go down to the hourly, you'll see this a little easier, but we put in a bear flag pattern right here, and then we broke out to the downside. At this point, we were predicting a potential head and shoulders top. One of the entry reasons that we teach for head and shoulders trading is entering at the shoulder, right? Now, I tell traders in the course that this is not a preferred entry. In fact, I wouldn't look to make this a normal entry. And obviously you can make it work. But one of the things you have to realize is that if you're entering at the right shoulder of a head and shoulder, you don't actually know that it's a head and shoulders pattern yet. So you're making a very advanced prediction that it could be a head and shoulders. Now, there are some circumstances where that makes sense, and this was one of them. But overall, just I personally don't like entering that way. But because we had a flag pattern here, right? We were looking for the retest of the flag. This would have given me a normal structured trade entry, which just would have happened to be at the right shoulder of a head and shoulder. So it would have been an entry reason for me. But as you can see, that level was violated, never got an entry reason, and we're working our way back down. So at this point, I have two options. It's what do I do? Do I just throw the chart away and look for something else? Or do I go down my checklist and look for the next reason for entry? And for me, I go down my checklist and look for the next reason for entry. And that would be a violation of the neckline. So if we delete this junk, right, AKA all the lines I drew in the chart, if we delete this junk, right, here's what I'm looking for. Here's our neckline of the head and shoulders top. If we violate this neckline, then, right, or let's just put it back into the IPDE since we talked on that earlier. If we get a violation of that neckline, right, I can identify a lower low, lower close. That allows me to make the prediction that price is likely to continue lower. Now that prediction comes in three parts, right? I want to identify, or I want to predict what price is likely to do. That's one, right? Make sure you write this down if you're new. One, what is price likely to do? Two, where is price likely to go? And three, how is price likely to get there? So a lower low, lower close, a violation of this neckline, would allow me to make the prediction that price is likely to continue lower. If price is likely to continue lower, the level in which I think we're likely to continue lower to is going to be right around here, about 114.40s, right? You can see that's the shoulder line, or the neckline, of our previous head and shoulders bottom. Also, if we take a one-to-one measured move, so we take the equal length of this move right here, this last move down, if we copy and paste that and project another equal length move there, you're going to see it's going to be right around that level as well. We may actually have a 127 there as well. 127 a little bit higher, 1414 right at that line. Let's see if we have any Fibonacci retracements there. I'm going to call 786. Ooh, 618. Nope, so a little bit of Fibonacci confluence between that level, between 114.70s and 114.44. But mainly what I'm looking at is structure, just because structure is the main part of my philosophy. Fibonacci's is kind of, it's nothing wrong with Fibonacci's. I use them for extra confirmation, but structure is always first for me. So we predicted that price is likely to continue lower. We projected the level in which we think price is likely to continue lower too. Now the question is, how is price action likely to get there? And there's only two ways, right? This is the easy part. There's two ways that price can get there. If we violate that level, we can just go straight down, right? And nosedive to that level. Or we can move very similarly to how a trend normally moves, right? Look at this move right here. We eventually get from 117.35 down to 115.33, but we don't go straight down. We go down, we go up, right? We ebb and we flow, we ebb and we flow. We put in a new structure low, outside return, new structure low, outside return. And each time we have one of these outside returns, or you can call them retracements, pullback, whatever terminology you want to use, this offers a trading opportunity. So what I would look for here is a violation of this level. Look for a little bit of relief in the market, a little bit of profit taking for those who caught the breakout, and then look for secondary opportunities to involve myself on a pullback trade, meaning selling it as the market pulls back in the previous structure. So those are the two ways. Again, breakout traders, you're probably going to put a sell stop order and just get in right away. Pullback traders, you're waiting for the pullback in order to get involved and looking for a move down to 114.40s. And then, of course, my bigger projection is still down to 110s. And I was talking to one of our traders on the chat he was IDing the same trade. We're having a good conversation. We're both looking at the exact same thing. And we just had a nice conversation about targets. And this was the beautiful thing, right? Typically, when I don't interact on a lot of social sites, but you guys know I'm very active on Twitter. I do post on TradingView from time to time. And a lot of the times when you post on there, people ask questions for the wrong reasons, right? You get people, I did an idea on pound dollar the other day, and there had to be about 4 or 5 people that took the trade just because I posted an idea. Now, I never involved myself in a pound dollar trade. I never got any reason for entry, but I think the day after it started moving, I think it moved against us. And I got all these messages. Hey, Akil, I took the pound dollar trade because you shared an idea and now I don't know what to do. What am I? You're trading the wrong way, right? The idea isn't to copy other traders. That's one of the quickest ways to go broke, right? You never want to put money at risk when you don't know what you're doing. That's key number one, right? Don't hop in a car and try to drive if you don't know how to drive. You're just setting yourself up for disaster. But the conversation that I had with this trader was about the why. He was already taking the trade, right? He was already looking to get short at the same area I was. The difference in opinion that we had came on target projections. He was shooting for very conservative targets. I was shooting for very aggressive second targets. Again, looking for the 110, 108 level based off the higher time frame projection. And he just wanted to pick my brain why. I said, okay, I'm just curious. Why are you shooting for longer targets on this particular trade? Because usually you're a pretty conservative trader, Akil. And I know you shoot for a few home run trades a year. Those are trades where I try to get 300-400 pips out of the market. Maybe I do that 3 or 4 times a year max. And we had a good conversation about why this is one of them versus maybe another trade that wasn't. And that's what I like to see. I like traders who already have their mind made up. They know what they're doing because they have a plan. They're following the rules, but they're looking for advice so they can take their trading to the next level, picking the mind of someone that came before them. So I was very proud of this trader. It's someone that we've been working with for a while. So I'm excited to see his mind was in the right place. But anyway, let's go. That's enough rambling. Let's go to our next pair, the Aussie dollar. And this is going to be a pair that you can use as a swing trader and a day trader. And this one has a lot of opportunity. Now, you're going to see these green boxes on my chart. These are called our VS1 levels. They are visual structure indicators. So basically, it's a visual representation of key levels of support and resistance. And you can change them to whatever time frame you want. You can make them higher time frame. You can make them lower time frame. Whatever type of structure you want to see. And this is one of the softwares that we give away when you take your free trial. You get to try it out for 2 weeks, right? So have fun with it. But you can see that the green box here represents a previous level of major structure support. And if we walk through that IPDE process, I want you to walk through it with me, right? First step, identify. So looking at your chart right now, what do you identify? What do you notice? What has price recently done? If you said violated previous structure, you are correct. Give that man or woman a prize, right? We have violated a previous level of structure. We identified that. So based off of our rules, right? And again, this is all rules based. You kind of know this, right? Or at least when you go through the training process, you will know this. Let's put it that way. Based on our rules for a violation of structure, we now have to make a prediction. What do we predict? Is price action likely to go higher or lower? Thinking big picture, higher or lower? What would you say? Price action is likely to go lower. Good job. Now, remember, the prediction part is a 3-part prediction. What is price action likely to do? Where is price action likely to go? How is price action likely to go there? What? Right? So it's what, where, how. What, where, how. What, where, how, right? If that's not ingrained in your mind by now, I don't know what's going to do it. So now that we've made a prediction that price action is likely to continue lower, the next question we want to ask is, if price action is likely to continue lower, then where are we likely to continue to? Right? And we can jump out to our higher time frame. You can see the major level of structure that was violated right here. These lows from, I think, 2016, I want to say, right? Jason Grayson just posted our accountability session. So we look at our next level, we look at our price chart, and what we need to do is we need to identify our next level of structure. And we can just take a look at these lows right here, right? We have a section of 2 lows. We have one right there and we have one right here. And we'll be conservative and take a look at the first one. This is going to be at the 69 even handle, right? 69 cents. So we can make the prediction that price is likely to continue lower down to the 69 cent level. Now, we're currently trading at 71 cent, right? So there's about 200 pips of opportunity, right? 200 pips of shorting opportunity to come on the Aussie dollar, right? We made our prediction on what is likely to happen. We made our prediction on where we're likely to go to. Our final prediction is what? How are we likely to go there, right? And again, there's only 2 ways, right? There's 2 ways that we can get down there. We can either go straight down there, or we could put in a trending motion where we do something like this, right? Maybe we retrace back up the structure. Let's give myself some real estate. Where's that level at? Down there. We retrace up the structure, we come down. We retrace, we come down, right? We retrace, we come down. We retrace, we come down. And when I do this type of analysis over the weekend, right, I use that pre-market checklist I gave you guys. If you guys didn't see the video, 2 weeks ago, where I said I think I have a free gift for you, go watch that video, click the link, download. Matter of fact, I'll put a description in this box as well. You can download the free pre-market checklist. I write this down. I write down my overall view on the Aussie dollar. I write down where it's expected to go, and I write down my expectations and how I could potentially look to get involved during the week. So I know that during this upcoming week, I'm looking for one thing. I'm looking for pullbacks, pullbacks, pullbacks. I can look for this on higher time frames on the 4-hour chart here, on the hourly. I can look for this on lower time frames on the 15-minute chart or the 5 range bar chart. If you guys are not familiar with the range bar chart, beautiful chart for day trading. In fact, we have a whole course dedicated to kind of using this chart and kind of filtering and doing like a market scanner. This would be an excellent chart to look at and track because you're going to get more opportunities, more of these ebbs and flows. Now, there are pros and cons that come with the range bar chart, right? We're not going to go through all of that today. We talk about that in the course, so you can check that out. But it's an excellent way for you guys that are day traders to get involved in kind of the first strike entry on this move. And the comforting thing is, right, if you guys haven't noticed, I know exactly what I'm doing with this pair for the week. Right? So I'm coming into the market on Monday with a game plan. I'm not coming in on Monday thinking, okay, I might be doing this. I could be doing that. Maybe I'll do this. Right? I'm drilled in. I know exactly what I'm looking for on this pair. I know exactly how I'm going to execute it. And the only thing I'm doing now is I'm just waiting. I'm just waiting for the market to give it to me. It reminds me of my days playing football, right? I was a wide receiver. I played some cornerback too. I remember cornerback, right? And the wide receiver's running. We do a lot of film study, so you can you read routes. And I know I'm reading the wide receiver. I know exactly what type of route he's going to run. I know I'm going to jump on it, right? Because I've done my film study. All I'm doing is I'm waiting for the quarterback to throw it. And I'm sitting back in my stance. I'm in my head. I'm like, if you throw it, quarterback, I'm jumping all over this. I'm taking it to the house. And I'm not prematurely moving, right? I'm not giving away my position. I'm just doing what I'm supposed to do, right? I did all the work earlier to develop that game plan. Now I'm just waiting. And if that quarterback throws that ball, guess what I'm doing? I'm hopping the route and I'm taking it to the house. If Aussie dollar gives me an opportunity, I'm jumping on it and I'm not looking back. No hesitation, no fear. Why? Because I've done my testing. I know that I have a profitable strategy. I know my entry technique. I know that if I consistently do what I'm supposed to do in the market, I will be profitable. You know how I know that? Because I've tested it. Because I've been doing it for the last 6 years. Confidence is key. If you guys didn't hear it, I did a podcast episode, this past Wednesday. It's called The Real Value of Backtesting. It was talking a little bit about the difference between manual backtesting and automated backtesting. And I think automated backtesting is junk. Now, if you're trading an automated system, maybe it's a little bit different. But if you're going to be actually trading the market manually, automated backtesting does nothing for you. It gives you numbers, but it doesn't give you belief. It doesn't give you confidence. And many of you guys know, let me know in the chat if I'm wrong, right? Confidence is key. How many of you guys have seen a setup and you've just been too scared to take it? And then you recognize or you see that a day later, the market did exactly what you thought it would do, and you would have been up a lot of money. Seriously, give me a comment in the chat box if you've been there, because I know I'm not alone. I've done it. And I think you're going to be amazed at how many other traders out there have done it as well. But when you have confidence, and confidence comes from doing the work the right way, when you have confidence in what you're doing, you don't miss opportunities like this. Because opportunities like this, they don't come too often, guys. We've got 3 months left of trading. September is typically a high volatility month, a very directional month. We've got a directional move on our radar. This may be it for the year. And I'll be damned if I miss this opportunity. So anyway, that escalated quickly, didn't it? Anyway, I hope you guys enjoyed the video. Again, if you're interested in joining us and working with us on the platform, please check out our 14-day trial. Trust me, I think everyone should be doing it. The amount of feedback we've gotten from people that have gone on to be premium members and people that just took their 2 weeks and left has been amazing. And I want you guys to think about it this way. We have the best trading platform out there, right? We had a trader that we interviewed yesterday who is a money manager, 25 years old, managing money. He came and he said, man, I wish I knew about this before I got started, right? This is a place like none other. Not only are you getting quality education that is teaching you how to trade the right way, teaching you the skill of trading, not just a magic strategy, teaching you how to create something of your own. But you're getting the help of hundreds of community members that are on the same path as you, some at different points, some at the very beginning, some at the very end, and they're all helping you to push you in the right direction. Get on the platform, sign up for that 2-week trial. It's $1, right? I don't care if you plan on staying and becoming a premium member. I don't care if you plan on bouncing after 2 weeks. Get on there and be a sponge. Sponge up information. You're getting thousands of dollars worth of education for $1 in 2 weeks. I know if this were me back in the day, you know what I'd do? I'd be on the chat 24 hours picking the mind of every trader there. I'd be in both the London live room and the New York live room 6 hours a day, taking in as much information as I can. I'd be watching every single Trading Edge video that comes out every day twice. And then I'd be going back and watching all of the archived ones. I'd go through the emergence course 4 times. I'd listen to every accountability session. I would do everything that I can possibly do within that 14-day period to learn as much as I can. And even if I can't stay, I've gotten so much better. And I've built some connections. So I know that, I don't know if that sounds like a hard sell. I'm not trying to sell you on anything. I'm just trying to give you the opportunity. I want you guys to get better. I don't care if you stay or not. Everyone's in a different situation, but do something to get better and do it right now. So I'll see you guys on the platform. I'll see you guys in Monday's Q&A. Naomi, we're going to talk about fractals, right? So the hidden trends that exist inside the bigger trends that confuse you and twist your brain. I'm going to clear that up for you and hopefully push you on to the next level in your training. And for the rest of you guys, I'll see you next time I do a YouTube video. I don't know if it's going to be next week. I've got a charity bike ride I've got to do. But I'm sure I'll see you at some point, right? I'm not going to be gone forever. But until then, plan your trade, trade your plan, and you guys have a great weekend.